Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, December 24th, Christmas Eve. The year's 2018. Let's talk trading. Realistic expectations. When you were a kid, did you want a pony for Christmas? I mean, depending on exactly where you lived, it might not have been too realistic. I mean, if you grew up in the city in an apartment, getting a pony, that really wasn't, too realistic. Now, a puppy or a kitten, on the other hand, that probably was more doable. Or hamster or goldfish, probably even more doable, right? What's that got to do with trading? Well, the thing is when you sit down at your computer to place a trade, do you have realistic expectations? Are you expecting this trade to make you a lot of money? Is it realistic? Are you expecting this trade to go your way and just keep going your way? Probably you guys aren't that unrealistic, but you might need to really question and analyze what you're expecting out of the trade. I mean, do you really think about it before you go into the trade? It's like, what do you expect? Do you expect 2 pips, 5 pips, 10 pips, 100 pips? What is your realistic expectation? Because you need to know when to take the money off the table. We all know how it feels to take the money off the table only to see the trade. Like if you take 10 pips and it goes to 30 before it reverses. We all know what that feels like to see that trade continue after we exit. But as I've said before, we really shouldn't care about that. I mean, we can learn from it, but we shouldn't be upset. We should basically not even have any emotions when we trade. I mean, we really shouldn't even celebrate a win or moan a loss. I mean, it's just part of the game. Let's just do the work. I mean, you see some of these teams in football, if you're watching NFL football, and they get a score, or even they make a tackle or something, and they're all boasting and parading out there, basically looking like fools. I mean, so they're up 14 points, they're high fiving and doing all this crazy stuff, posing for the camera, and next thing you know, when the game's over, they got their head in their hands because they got whooped. So there's really no cause for celebration. Just just do the job and then, keep doing the job. So once again, as this year winds up, I want you to think, as you're thinking about next year, I want you to have some realistic expectations for your trading. And I want you to use your money and risk management accordingly. Have some realistic targets, realistic risk. Now, the euro yen, only 5 pips off that monthly low. It definitely broke out of that inside bar, but we've talked about that. On the week, you see here, there was a very small lower wick zone. It went up and through it, and then it came right back down and through it. So right now, that short's worth about 36 pips. And you can see here, we filled a few of those. We still have 1, 2, 3, 4 gaps to fill, with the dollar yen being one of them. On the daily, once again, we went out of that low And you can see here we're 37 pips. The range is only 76. Christmas Eve, we're in the holiday. We're in the holiday zone. I mean, over this next week between Christmas and New Year's, we've got 1, 2, 3, 4, 5, 6 pairs ranging over 100, with dollar yen 92 beating the euro yen, which is only 76. But you can also see here some of these daily open cross buy zone trades would have paid handsomely. And to the downside, there was some nice movement too. And as we speak here, remember, we were going towards that pivot point. We missed it. Now you see here, there was a buy zone trade, but it came back down. And right there, you probably should have just scratched the trade. And you can see here, we had a short, and we're still in that short at 125.99 right there. And you can see here, it's pushing down a little bit lower. Green rats, get ready. We've got the range 75, so look for a green rat reversal. Once again, we missed that pivot. We're at daily S1, weekly S1s down here at 25.67. Once again, missed the pivot. And we've got a 3-ball. We just started this hour, put in a 3-ball. So right now we've got a long trigger, Larry Live at 26.10 to go long using the simple price action. You can see here lots of buying and selling. And there was a lot of waiting too, a lot of indecision there. Horizontal lines, I just have to love them. See, I think yesterday when we made the video, we were somewhere around here. And as you can see, red at the line, 41 pips. Now, just to be clear, for those of you just tuning in, you want to take the first line it hits with the candle color. So you can see right here, it hit that green line, or hit the blue line here, but it was a green candle going up. So that's your long trigger. You see here, there's profit to be made. Then here's the first line as a red candle. So you want to take the trade. If you miss the first line, you probably are late to the game, unless that just so happens to be because of your time zone when you get in the action. The wick zone, small wick, in and out, in and out, in and out, in and out. Now the holo setup, you can see right here. We've got a holo happening. And something's interesting here. Let me, okay. I thought something looked a little off, didn't refresh. So you can see we put in a new low. Here's the holo zone. So Larry live trade, long trigger, 26.04. There was a short trigger here, paid off for a few pips. Next long trigger on the inventory retracement bars, 26.17. Once again, horizontal lines from the previous day, week, and month. And once again, just taking trades at the line with the candle color. You can see here the bid crossed below the valley of the ask, and we're up about 3 pips since then. Einstein line, there was a short, there was another short. So you can see here, you're taking 2 or 3 pips. Some people will scoff at those trades. But you know what? That's okay. I don't care what they think. What they think about these trades is really none of my business. You can see we've got buying coming in 64, 650, 660 ticks of buying. And for those of you who want to know what I'm talking about, new to the game, might not have the indicators, press your F9 key. You will bring up this screen. You can see here, this is the bid, this is the ask. Now, if you were just starting, you see here, if this bid comes right above there like it did, that's buying. You see, price can't go up unless it gets above that current bid. I'm sorry, the current ask. The bid has to break through the ask for price to go up. And now, for price to go down, this ask has to get below this bid right here. That's how it works. That's how I look at it. So you can see here, for price to go down, it has to come below the peak of the bid. Otherwise, price is just wavering. And that's what this indicator is telling you, that since the bid crossed above the valley of the ask, call this a valley, this is how many buying ticks we've had. I think we might be setting a record here in buying ticks. But if this ask drops below this peak, you can see right here, there's the peak. If this ask drops below, then we'll go back into a wait state. And that's what the spread dots indicator shows you right here. TRO 2018 spread dots, donational. But you don't need it. You can look at F9 key, hit the F9 key, look at that tick chart there. Oh, wow, we just went to 1,000. I'm going to have to up. I've never seen that before. I'm going to have to give that one more digit. Wow, have to update that. That was huge. Okay. I'm glad we saw that live. And here we go again. Once again, the looking at those inside bar plots. And first day of the month, and this is the first day of the week. Still in that first day. We'll see what happens if price breaks out of that first day of the week. Once again, we're considering this as the opening range for the month. It's the first day of the month. Opening range for the week is the first day of the week. I'm thinking, wonder if maybe could use the 4-hour candle, the opening range. I'll have to consider that. Might have to be a whole different indicator. And here we go. Frequency distribution of the range. Here we're looking at the euro yen. And you can see here, you know, usually it's going to be bigger than 10 pips. So remember, if you've got a profit and all of a sudden it fails to make a high and then it starts going the other way, and you know it's going to be probably 10 pips or more, take your money off the table because you can see what happens next. I mean, that's just smart trading using what you know. And once again, I like to look at the wick zones, the dynamic wicks. You can see here what's going on with the wicks. You can switch over to 4-hour. You can look at the daily. You can see it was 91 days ago, right in here. That's where we are. So, fellow traders, once again, Merry Christmas, Happy Holidays, all that good stuff. I hope you have a safe holiday, especially if you're traveling. I hope Santa delivers all the presents you ask for, but remember, just keep things realistic, your expectations realistic. And keep in mind, it's not what you trade, it's how you trade it. So go out there and drain the banks.